Hello everyone, today is December 10th and this is session number 14. So we have only two sessions left, today and next week of the Wyckoff Trading Practicum course. These are the last two sessions of the Wyckoff Trading Practicum course as we know it. We're going to convert this into Wyckoff Trading Course Part 2, which we still will call between us the practicum, because this is where we practice, we develop the skill. Last session, December 17th, December special, we're going to start on Thursday. I'm excited about that too, because there's going to be some new ideas, some new material that I'm going to give you, something that I'm currently thinking about, and I'm testing. So you kind of will see this. On the top of that, we'll talk about a long-term system. How do you recognize the stability of the uptrend, and how do you actually trade it long-term and then trade around it? So it's going to be both new information, kind of like new ways of how we could look at things, and then also new kind of like a repeated tactical trading decision making. Something that we've studied, but maybe we haven't studied to that depth. So we're just developing the depth of that material. Only two sessions, this Thursday and then the Thursday after that, and then we're going on a break. Wyckoff Trading Course, the practicum, now Wyckoff Trading Course Part 2, the practicum, registration is open for the spring semester of 2020. We're going to start on January 7th. I have quite a few alumni in this class from the previous cycle. Some of you guys even came from the cycle before. And I think that we kind of probably are finding a very, compelling way of covering the markets, and at the same time covering the depth of the knowledge, and at the same time practicing and practicing. I think the bias exercise has become kind of like a thing, almost like an obsession in the last two cycles. If you're really, really into the bias exercise, and this is what I'm hearing from you guys, I'm just gonna put a little bit of the side note here. I'm hearing a lot of honest responses in your emails that goes like this. The bias game shows me where I am, and I see that clearly now. So that tells me a lot of things, not only about, the person that you are, in terms of, looking at yourself realistically and just saying like, well, yes, this is where I am, and I am acknowledging this. And then what's next for me? It's kind of liberating to say that I don't know something. I'm not as good at something. This exercise shows that. So I need to work more on that. How do I do this? Okay, well, I'm already in the class, so use this opportunity to extract as much value with this new awareness that this exercise brings. So kind of like on a very fundamental level, that's how I see it, that's how I view it. So thank you for those honest emails. I really appreciate this. As you know, I am trying to be as transparent with you guys as I can with all of my trades. Actually, the company is going to implement a huge policy in 2020 where, we're going to be extremely transparent with everything that we do, everything that we call, in the markets and so on and so forth. And that's just going to, kind of like elevate, the overall quality, of the offerings that we have. So, for those of you who are interested in repeating the course, and obviously bias game never repeats itself, it's something different. And as you know, there are so many questions that we addressed, so many exercises that we go through, and I always present, kind of like new ideas in this setting, because this is kind of like our R&D. and I like to play around in this class. Early bird is still on until the first week of January. Only $600 for 15 sessions as an alumni for early bird. So take advantage of that if you plan on continuing with the practicum. I think it's a very convenient forum for those of you who have 9-to-5 jobs. If you can, come home, especially if you're on the East Coast or like internationally, if you can come home and just once a week, even devote 2.5 hours just to this material and just to think once a week intensively about this material. But do this consistently week after week after week, and then follow the market and apply those concepts in the market as you kind of like, we're going through the market and I'm showing you the thinking about how the market, the structure develops. You are acquiring the same mentality as well as we go through those exercises, whether this is just an exercise, a bias game, or we are looking at the market or anatomy of a trade. It's the logic. It's how we think, about those things that needs to be installed. So repeating the course is obviously a valuable thing to do. Today, as usual, market update, anatomy of the trade, bias game, Q&As. On the trade analysis, we're going to touch upon this. I'm going to see if we have even time for this. But I want to start on this, and there is some exciting news about this. And then on the exercise, we're either going to do tape reading or a bias game, so we'll see what we're going to do. Rick is saying, we hear your heart, and we now join with you with our whole heart as well. Well, thank you. Yeah, heartfelt. Thank you. As usual, everything is for educational purposes only. Stop the recording and read the whole disclaimer. First question is from Anindo. I'm sending you a chart of Roku with 3 analog bars circled. So they are as circled here, here, and then here. After the first circled area 1, Roku made a bear flag and headed down. After the second gap down bar, circled area 2, Roku bottomed and went up. On Monday, Roku gapped down and then rallied, still in today at the resistance. My question is, can we tell based on analogs and Wyckoff analysis whether Roku goes down into a potential phase C test of the low? So does it rally to the top of the range and eventually breaks out? Wow, what a question. What a question. Well, my first reaction when I read this question, maybe like 5 days ago or so, was that they're actually not all analogs. I think this bar in the middle, let me just take another color. I think this bar in the middle right here, this is more an analog of the stop-in action where we actually stop in. So I would probably, have them like this. Yeah, so second is probably a little bit questionable here. But the first one and the third one, those look like analogs. Why? Well, because we have a movement to the upside in both cases. And then there is supply that's coming in, and that produces a synchronicity with the result. The price starts to move freely to the downside. And we have this the same here. So supply increases and we see the gap and then continuation. So in a way, that's probably just the beginning of the move. The question is, how would we know? Would we know from here that we're going to have some kind of phase C? Well, that's something that's still yet to be fully developed as a knowledge. I could give you some of the things that I'm thinking about and that I kind of use in my analysis, and that is that phase C could, take different shapes and forms. And, the precursor of the move into phase C is always going to be what happens in phase B. So therefore, there becomes a question of how do you identify phase B in the correct way, and then judging what kind of structure phase B has, then that would mean that certain development into phase C is possible. This is the material that is coming up, and again, Practicum is going to be probably one of the first places where it will be. Here, I would probably just not even think about the structure. I would be just thinking about volume and price, effort and the result, and kind of would try to build maybe even an understanding what is going on here. So let's just kind of walk through this a little bit, and let me just see a little bit updated information. Okay, so nothing happened really in the last 4 days. The volume came down, and yeah, all right. Okay, so the way how I would view this is that we went really fast to the upside. There was an overbought condition here on a much larger channel, and that produced some selling, also some selling into the news that Disney was coming up with its own streaming services. Apple was coming out with its own streaming services, and that put the pressure on Roku. And Roku sold out really quickly. In my opinion, we've just experienced a major sign of strength in Roku since the bottoming that we had here in phase C. Please note that this price here was from $20 and this price here was 170, so plus 150 points on a sign of strength. What does it mean? I mean, let's calculate in the percentage from, let's say, what is it, 28, I'm sorry, from 28 to 178. Could somebody really quickly calculate, what's the percent on that? So imagine having such a huge, massive, major sign of strength. You are going to have a lot of volatility in the stock, and if it comes down to 100, then you probably have some kind of extremely oversold condition. So this was a very interesting place to actually initiate a long-term campaign, and then we're seeing different reactions and different effort to push the price down. An effort slightly diminishes, and the result is still higher lows. So at this point, we would be thinking that there's going to be a continuation. Now, ironically, we're coming to the answer of the question that we've seen here. How could we define phase C? Well, if we're going to fail here, like one of the scenarios that Anindya is sketching here, if we're going to fail here, most likely we're going to try to retest 100, which will give us another interesting opportunity, maybe to add to a long-term campaign. And maybe this materializes into phase C. And I'm thinking, well, could we potentially kind of see if what's possible? Well, I'm seeing that there is a lot of buying on this way up. It was such a consistent way up. I remember just looking at it on the daily basis, and I started day trading this rally. And I started day trading this rally into Friday. And what was crazy about this, I'm trading this rally on the intraday basis on Friday with weekly options that are expiring literally in 5 hours. And I'm making profits, and my position actually doubled, and more than doubled. That's how this movement was. There was so much buying. It was like a pure effort comes into the market and just pushes us up. So I'm not sure if, with this type of buying, we would have, the retest of 100. 100 seems like such a value proposition right now, that somebody would be probably taking the price, the stock at, 120. In this case, they're taking the stock at around 130 already. So I'm thinking that it might actually stay, but I would rather trade it than guess, what's going to happen. So I like the scenario here that Anindra is, picturing. If we are breaking this trend line that we are on right now, well, most likely then I'm not just doing anything, and I'm just trying to see what's going to happen around $100, so maybe 120. Um, what kind of reaction we're going to have here? If reaction is positive, would it be another opportunity to come in and add to the long-term position, or maybe initiate it? And if it rebounds like this, is this a true phase C? So that's how I probably would be thinking about this. But there is a lot of knowledge behind this question that still is coming up. We're going to go into definitions of different phases, different variations, and so on and so forth. And that material is still ahead. 540 percent. Wow, that's a massive sign of strength. So think about if this major sign of strength is 540, then what would be the return on the actual trend? So granted, it still has to materialize. It still has to even finish the backing up action. And you can think of this not necessarily of the backing up action. The only reason why I'm thinking that this is a backing up action is because the texture of this run is kind of like fluid. There is no changes of character in the way how the price went up. So it looks like one swing up, and that's the way where they were getting into the position. And now they are still getting into the position. Look at the volume signature, quite significant. And this kind of like consistency and persistency with which institutions are getting into this position, they don't care about price change from 120 to 160. That's kind of insane, right? What does it tell us? They probably thinking that it's gonna go much higher. All right, but I think that with Roku, it's all about timing, especially with the momentum stock like this. You have to time it correctly, or you have to come in with the size that does not bother you, even if the stock is not going in your direction for some time. And that's kind of like the strategy that I have with this stock. All right, let's look at the markets really quick. Again, whenever supply comes, it gets absorbed. Whenever supply increases, it gets absorbed. Whenever supply comes again, it has, no capacity to consistently push the prices down. Some demand comes in, and even if supply is going to overwhelm demand at this point, and we're going to have maybe like another low here, maybe like another higher low, that only would point out up. we might have some kind of consolidation. We might go into like, some kind of prolonged trading range into the end of the year, maybe into like, the first week of January. But I would say that probably all of this Santa Claus rallies, looking, at how consumers behave, and how liquidity is available, looking at the news cycle, it seems that it's possible that we could have strength into the close of the year and we could have strength into the beginning of the year. And that's actually kind of like how it feels. So, again, every time supply comes in, it has, some kind of inability to push the price down for a significant period of time, just because somebody comes in and buys and that sustains the rally. So, and this is where we are. What is leading? Russell 2000. This is where we would like to be. Small caps, mid caps, a lot of health stocks, a lot of bank stocks, and they are showing, especially health stocks, obviously, had some reaction, but still the runs that they had, they're showing some strength. What else could we say here on oil? I think the critical levels here is just to hold between 58 and 60, and actually it is more critical even just to kind of get away from here, because the more we stay here, the more there is a possibility that we might kind of like slip down again, and we don't have a lot of room for error in this case, because the support consistently goes up, and then at some point this type of support could fail. And this is actually coming back to Aninda's question about potential phase C. How could we know in phase B? Well, this kind of looks like it, where we are from the oversold condition, go quickly up, and then we consolidate in phase B. And that would suggest that institutions got into this position, getting into this position, not willing to give up, and when the ones that actually got into the position, maybe they were early adapters, when they see price deterioration as other institutions are not getting in, that's where they're going to give up their positions and they're going to capitulate, and that will produce a move to the downside into potential phase C. We don't know whether this is going to be a high low or low low. We would judge that as the price goes down by the character with which the price moves down. But here is that scenario. So in a way, when we think about tactics here, we basically don't want the price to go through this level or commit down around this level. One half of the big spread of this bar, the low of the loss commitment to the upside, those are very important levels. So maybe a stop loss somewhere, if we want to be extremely conservative, somewhere slightly below this level. But then if we want it still to see with which way there is a possible downfall here, then probably this is the more catastrophic level. This is where I would be keeping my stop loss if I'm still thinking long-term campaign. So oil is in a very interesting spot. Gold, I couldn't find an edge for quite some time. I think that we're still not kind of like fully there. All of the attempts to go up do not have a lot of demand signature behind it. So I think that if we are going to have a rally, that rally is going to be more a technical rally on the supply exhaustion rather than on the presence of the demand. Obviously, when we start, when we break to the upside, we might attract some speculative demand that could come. And I think that maybe there might be some selling into it. But the rally is possible. I see that the rally could happen to, these levels right here. This looks like, a good trend line. A break here would probably signify, quite a lot, because this would be a deviation from the trend that we are in. And imagine if we are breaking this trend right here. So this would mean that we could actually come back even to these levels, which I doubt that it will happen. I think that once the price goes and creates an oversold condition right here, I think the institutions still would see this as a very, very attractive value. And some of them will jump on the board. But until we see more a bullish action that actually has some demand signature behind it, I think I would stay away. And I thought that this was actually a really good decision to stay away for like a month from gold and not trade there. So I'm really happy with that. All right. That's it for the markets. Let's go to the next question. This comes from Simon. Have I labeled the Wyckoff phases and events correctly as a horizontal structure, or is it an upsloping structure? I second guess the horizontal structure since phase B is too small and the lowest low of the sign of strength rally is also in the middle of the trading range, or is it earlier? If so, it makes B even smaller. All right, well, let's have a look. And right away, when I look at this and I'm looking at the beginning of the trading range, I'm looking for the climactic action. Where is it, guys? I'm going to give you some candidates. Candidate number 3, candidate number 2, candidate number 1. Which one is the selling climax in your opinion? All right. Okay. All right. So we have just one person who is saying that number 2 is the selling climax. And I could kind of see the logic behind that. So let's go really quickly through that logic. So I think the logic here is that number 1 is preliminary support, and then number 2 becomes selling climax. So we can't really, label it like this just because the rally that we have here is the rally of the change of character, and therefore it suggests that the selling climax was earlier. Okay, and then everyone else, and then let's see what Dimitri is saying. Okay, I'd say 1 is a selling climax because of the change of behavior, really. Yes, so we're talking about this. Absolutely. Okay, well, I would say that maybe, just maybe, looking at the characteristics of how the price acts, we have the climactic action not at 1, not at 2, and not at 3, but at 0. Look at how the price moves to the downside. There is some kind of hesitation here. Why would there be hesitation on increased volume signature? So effort is increasing, demand is increasing, and that's what stops the price from moving further down. There is some buying that is happening in this area. And yet then climactically the price goes down on a lot of volatility, volume increase, momentum increase, velocity increase, and panic. So then the prior attempt to stop could be a preliminary support, and this could be a climactic action. How would we check that? A rally from the low of the selling climax to the high of the automatic rally should be the largest rally in the downtrend that we have seen. Is it? Yes. And that acts as a change of character. After that, we have a secondary test that could come as a lower low and could have the characteristics of diminishing supply. And phase C and phase B here kind of like, you could probably put it like this, phase C, and then phase B is still going to be the largest among the two. And phase C has a spring and a test. Phase D, last point of support, its own trading range with local phase C, and this becomes minor sign of strength, and this becomes major sign of strength. And probably that would be my labeling here. So sometimes it's easier to think conceptually, right? So you kind of see one event and then does that make sense conceptually, to put it in some kind of structure? Where is the structure? Okay, well, if this is a selling climax, then I have to have a test. Okay, could I have a test as a low? Yes. Well, there was just a little bit too much supply and demand was not that present. So the price was still going down, but it did try to rally and then it went down. These are the swings if we would look at them. This is the structure. So could this be phase A? Yes. Is it downsloping range? Yes. So could we have the sign of strength, commitment above the resistance? Yes. And then the backing up action, which acts as last point of support in the larger trading range, to the support that acted as a resistance before. So a lot of points kind of like come together. So you have to play around with this a little bit. If you're labeling it horizontally, I think then definitely this is a selling climax, automatic reaction, secondary test, phase A. You can't do anything here. So then this is phase B, and then this is the last attempt as phase C to take it to the lows, but there is not enough supply and it becomes a higher low. So you could do that as well, and then this would be a preliminary support. Right. Okay. Is the lowest low of the sign of strength rally? Or is the lowest low of a sign of strength rally here? Okay, so again, it just depends on how we actually view it, but anything from the low to, let's say, this level here could be considered a minor sign of strength, and then up to here, a major sign of strength. All right, great. Let's talk about trade desk. This is our anatomy of the trade. What do you guys think? We are in this position. I don't think that we scaled out. We were just staying in this position. The idea was to look at the test. So what are you guys seeing here? Give me some answers. Are we still keeping this position or not? And while you're thinking about this, let me kind of draw the analysis that we had last week. So we kind of like in this huge big formation, we had a favorable entry at the support. We quickly, with the momentum, hit the resistance. Supply comes in, and what happens? keep it. Change of character. If it's a change of character, then we probably stay in here, right? So kind of like in this range. Retest of the prior resistance one way back. Halfway back. Yes. So somewhere here. So let's kind of look at this in phases. Would we say that the behavior in this area right here, in this phase, is bullish? What do you guys think? Is the behavior in this area that I highlighted in yellow, is it bullish? Yes, of course. Why are you thinking for so long? You see in front of you a rally that came out of that area. It's an accumulation, local accumulation. So therefore, you don't even have to go through the analysis. You already know the result. You know, it's a bullish behavior. Okay, this rally, is this a bullish behavior? Yes, absolutely. Bullish, 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 yes. Okay, then this emergence of the supply, is this a bullish behavior or bearish behavior? And obviously we were looking at the result, and the result is in the direction of the supply that's coming in. So we probably would say that yes, there is a bearish behavior on this bar. So now we have to test it. And we would have a conclusion, either bullish test or more bearish looking test. How's the test looking? Bullish or bearish? This whole test we are in right now, does it look bullish or bearish? Yeah, it looks more bullish. Why? Well, because it didn't really break the support, yeah, that acted before as the resistance. We are coming back into the high grounds here, one half of this area right here. We almost, covered the whole length of the daily bar to the downside. Somebody was saying that this daily bar that was so aggressive to the downside does not have commitment below the support, so which is a big deal. So that it doesn't look like this. It doesn't look like it goes through the support and then just breaks it. It kind of stops at this support cluster. So that suggests to us that some demand is behind that volume signature if the bar stops like this, like right on the support. So the test looks bullish. So therefore, what would we be thinking about our position? Probably we still would be thinking that, it's still bullish for us, and we still have to see how this volatility will resolve itself. Volatility usually would demand the resolution of this by the successful test with the higher lows and diminishing supply character. We already see that supply is diminished here on this bar, so that's a really good sign. But we're still not out of the woods. We still have this bar as the last bar committing to the upside. So this is the level where we could fail and start retesting 220. So we could stay in the trading range here, and we still don't see a lot of signs of like fast absorption here. So that just suggests that if we're gonna have attempt to go up, maybe not a really good chance for us to overcome it. although momentum here is moving really fast. Let's just observe. Let's just kind of like see what's going to be the continuation. Oh, this is the incorrect volume signature. Yeah, it's on my TradeStation. It's set up in a different way. I apologize, guys. All right, so I think that majority of you are saying that we're going to keep it. Is there anyone in our class that thinks that maybe this is a good place for us to get rid of this position? Let me see. Eric is saying, okay, we didn't make a new high or test the prior high, but no supply coming in. Look at the prior analog. There was some consolidation before a move up. And by the prior analog, Eric, which one are we looking at? Which area? Something like this, right? Where we have this down move, a lot of supply, then a move to the upside, and then this kind of like trading range type of action, and then a move to the upside. May or July. Okay, May or July. Okay. Okay, yeah, I definitely could see this. Yeah, so a move to the upside. Yeah. Well, let's just see. Let's see. I mean, if that would be the analog, that would be actually a very interesting thing to observe. And there is a long-term support here. So we could kind of like hit the support again, be close to the support, and then start to take off. But what we can't deny in the way how this whole structure looks is in this long-term secular trend, we have a short-term oversold condition out of which there is a lot of momentum on a lot of buying, and then whatever supply comes in, it has no capacity to significantly take us below some support levels. So it still looks bullish and suggests continuation after the absorption of the supply that we have here. Anybody is actually in this position? I kind of decided that I'm not going to be, just in case, because we're discussing the stock. Anyone in this position? No one? All right. Okay, well, I think, this is a really good pickup. Okay, one person. All right. Well, good trade. Good trade. I wonder, what the next group is going to decide, if somebody's going to kind of transition into the new cycle, into the new semester. This would be a really interesting stock to follow. Maybe we'll just follow it as anatomy of the trade, fall semester, and the new group would carry on the trade. So we'll see. We'll see. It's just interesting to still go and analyze it, and see what's going to happen. All right, so here's a trade that I wanted to show you guys, and it comes from Ronnie. And Ronnie is saying, just want to share a trade that I was able to put on due to what I've learned through your courses. Right, so let me just kind of go to, okay. I should have cleaned this up a little bit, I apologize. Okay, so long-term position. I was thinking of closing due to the huge short-term gains. Was not unsure. Okay. Any input on the trade itself or things I should have looked for the closest future? Okay, would it be a good? Okay. Well, first of all, I'll just quickly look. First short-term position taken here at 51.4. Second short-term position taken here at 46.7. Long-term position have taken in this previous range. So you have a sizable position as you go into this run. And by the way, what is this stock? What is this symbol? I couldn't see it on the chart. Can we share that? Oh, and Ronnie is not here. Okay, so I'll have to ask Ronnie, but would be good to know. And then look at where the price goes. And so Ronnie is closing it at 101, 100% return in for the long-term position in a good period of time, and then for the short-term position, literally in 2 months. I would say anytime you make this type of return, you take it because it's acceleration that is not sustainable, and therefore you're gonna lose a lot of the unrealized gains that you've created. So first of all, fantastic trade in terms of the entry points and in terms of staying in the trend. It's really, really hard to stay in the trend like this, where it goes into the overbought condition so early, and then another overbought condition, and another overbought condition, and it kind of stays ridiculously there at that level and still accelerates up. And that all happens behind a lot of volume signature. Let me show you what could have been and what would never should be. And I'm just a little bit emotional here because I'm going to show you my mistake, my recent mistake. This is probably is costing me, well, a couple of trades are costing me like, the year more like an outlier year. So this was a recent favorite as a momentum stock. I'm sure that somebody might have had even position here together with me. I was looking at kind of the same structure as we have in trade desk, only on a smaller scale. Got into the position right here on this reaction, all option, leveraged. And as the price goes up, I'm looking at very short-term overbought conditions, and it just shows me overbought condition right here, and I'm getting it out at around 45. So I'm making 50% return in a month and a half, and I'm not staying for the last climactic run right here. And look, even right now, it just shows a lot of strength. So that trade that Ronnie has conducted could have been this type of trade. It could have been so badly constructed and conducted like, I've done this one right here without, letting it go. And something that, by the way, you guys should be extremely interested in this material. Franz and I are regularly now working on the videos, anatomy of the trade, on the trades that we've done. And by the way, I want you to encourage, and probably I'm gonna make it as one of the homework assignments in the new semester. You guys are off the hook. I'm gonna ask them to submit their trades for our anatomy of the trade post analysis. So we'll see what kind of trades they're gonna send. But it's just such a great process to go through the post analysis, to look at your trades and to analyze why did you do what you did. And I started thinking, why am I selling into this? Well, there is no volume signature of climactic nature. Yes, it increased and it looked maybe on a chart like this. It looks a little bit climactic, right? We're going into this and you already have, a sizable profit. What do? Well, the rule should be scale out. Take 1/3. It's almost like you take in maybe like that emotional edge of being in the correct trade and just timing your exit correctly, right? So you want to make it it's already a profitable trade. And even if you take 1/3 off and the other 2/3 are going to completely fail on you, that 1/3 is going to cover that loss of the remaining units and still give you some small profit. So that's what you're working with at this point. And of course, a more correct decision was to scale out, take that again, kind of like an edge off, and then continue with this trade. Nothing threatening here. Supply comes in, but doesn't produce that reaction. I'm biting my nails after I close the position. Big jump. Here, I'm already sensing that I'm too late. It starts its climactic run, and it's more identified by the volume signature and the gap itself. And I'm already seeing that supply is coming in. So if supply is coming in, we are somewhat close. Maybe another 10 bucks. How would I trade this? Maybe just the intraday is a possibility here, but nothing really on the swing, unless it's very, very short-term swing, like 2 days or so. But would I close here another 1/3? Probably not. We're probably still anticipating at least a push above 60. Here is that push, and the volume is even greater than yesterday. The bar is larger and it still closes up, suggesting that that close up, even on this climactic volume, and this is how we would be interpreting the daily. We obviously would want to go to the intraday as well. We would be thinking that there is a little bit more left, a little bit more push, maybe like to 70. Why? Because of that close. Still a lot of momentum. So here I would go next day on to the intraday picture and I would look into the runs into 70 and the failure around 70. Okay, so the next day comes, 70 is hit, and here just, either you are tightening your stop completely, or again play an intraday. And somewhere here, you're probably still around 70, you're going to be exiting out. So such such a great selection, such a great timing, and such an undisciplined, exit. And I'm sure that, you guys will be watching the video and kind of like agonizing with me over what could have been, a very, very like much a trade of the year here, just as a swing trade, which brings me back to Ronnie. So think about how hard it is to stay in a run like this. It takes, not just courage, but this ability to actually sit on the game. And this is something obviously that I'm still learning how to do. So a really, really great trade overall, great execution. I can't really add a lot to this. I think that the way how you're scaling out at that bar is just phenomenal and fantastic, because the next bar is a change of character bar. The next bar, a red bar, brings a lot of supply. So just a fantastic trade. Something that, I bow to. I bow to this trade. It's like a perfect trade. So, we should definitely acknowledge that. Those trades do not come that often. And unfortunately, in my arsenal, I don't have a lot of those. I have some like this, but not a lot. Well, thank you for sharing, Ronnie.